Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
Great news. We've got a sponsor. This show is now brought to you by Miles Franklin. And when it comes to protecting your wealth, you know there's nothing better than gold and silver. That's what I'm buying. I hope you're doing the same. And once you make the decision to buy gold and silver, there's no better place than Miles Franklin. Look, they've been in business 22 years. And the reason I'm a customer is because when you buy, they ship. Go to milesfranklin.com or call them at 800-822-8080 to get a free quote. 1490 WGCH. This is Kerry Lutz. You're listening to the Financial Survival Network. If you're wondering how we got into this economic mess and how we get out, and are all the economists out there just Keynesians and collectivists, well, I've got Dr. Joseph Salerno. He is vice president at the Mises Institute. He's also a professor at my alma mater, Pace University, and he's got some answers. Dr. Salerno, welcome to the Financial Survival Network.
I'm happy to be here, Kerry.
I am extremely honored and pleased that you're here because you're at my alma mater, hopefully banging some sense into these young, mushy minds and telling them how free markets are the salvation of humanity, not the destruction of it. When you got started in the academic world, what happened? How were you received with the Austrian economic perspective?
Well, when I got started, it was in the early 1970s. People were questioning Keynesian economics because for the first time, we had what was called stagflation, right? We had rising prices in the early 70s and high rates of unemployment. So people were looking for answers. But the answers that they found were, to some extent, Milton Friedman's answers. And that is that you still had to have a fiat, paper fiat money that was controlled by the Fed, but that it had to be responsibly managed, that is, increased at a very slow rate over time. Whereas Austrians, of course, believe that there is no such thing as responsibility when it comes to a monopolist printing paper money. That is, that the monopolist, can at any time change the rate at which it supplies money to the economy. So the Austrian perspective was to go back to a gold standard. So to answer your question, that didn't play very well in the 1970s. People were not ready to hear the message that a sound money involved commodity money like gold.
Now, here we are, 2012. We're in the midst of this maelstrom. The economy, the meltdown, it just continues to go on and on. And yet back then, there was still a chance that it could have been prevented. Now, the one thing Milton Friedman always used to say in criticizing bureaucracies, whether it be the Department of Agriculture, food stamp program, or whatever, he would always say, the collectivists always said, no, the program is good. We just need to get the right people in there, and then everything is going to be okay. And yet he made the very same mistake, saying we just need the right people in the Federal Reserve, and this government program will work. So there's a real conflict in there in his beliefs in monetarism and not relying upon an external commodity-based currency, right?
That's absolutely correct. In fact, if you look at Milton Friedman in the 90s, he was a critic of the Fed up until about the 1990s, early 90s. And then he began to say that Alan Greenspan is doing a wonderful job and that he's one of the best Fed chairs that we've ever had. And a year before he died, in 2006, he went on the Charlie Rose show. This is December of 2006, and he was interviewed and asked about Fed policy, and he said, Fed policy is perfect. We've never had more growth than we've had since the early 90s, and the Fed is largely responsible for this. And, of course, what you call the maelstrom hit in late 2007. So not only was he wrong in his analysis of how government would control money, But even in trying to forecast the outcome of this policy, which Austrians believed was really inflationary, Friedman missed the fact that there was an inflation. And the reason why he did, and this is true of most economists, they only look at what's happening to the consumer price level when they're trying to figure out if there's inflation or not. So if prices are rising at very rapidly, they say there's inflation. Whereas Austrians claim, no, you have to look at the money supply. The money supply was increasing very rapidly through the 90s and also through the first decade of from 2000 to 2005 or 6. But it was not shown in rising consumer prices for various reasons. What happened was we had a high-tech bubble, so we had a stock market boom in the 90s, and then that was followed later on by a housing boom and another stock market boom. So Friedman, again, his definition of inflation was so narrow that he missed these bubbles.
Yeah, because when you print the money, it's going to go someplace, and it's going to go where the speculators are, and whether that's commodities or housing or tech companies, the Fed blows the bubbles, and that's what's always happened. And the interesting thing is we still had bubbles when we had a commodity-based currency, but you couldn't have multiple bubbles being blown at the same time, right?
Yeah, no, that's correct. When we had even under the gold standard in the 19th century, there was, for example, railroad speculation, so there would be a bubble there, but it was pulled back pretty quickly. In other words, the banks still could keep fractional reserves. They didn't have to hold full gold backing for their notes, so you did have some scope for inflation. But the point was that when that inflation began to take hold and you began to get a bubble somewhere, eventually gold reserves would start to flow out of the banks, and the banks would have to stop lending. At that point, the bubble would collapse. And as you pointed out, it wouldn't become a widespread, economy-wide phenomenon necessarily. You would have it, more localized than you would under a fiat money regime like we have now.
Right, and I had Jim Rickards on a couple of weeks back who wrote that book, Currency Wars, and he's taking the longer horizon, like we've got 10 years to get our act together and go back onto some type of gold standard. But I don't see it that way. I see this is urgent. Nobody's addressing the underlying cause of the entire world economic collapse, and eventually we're going to be back on some kind of metallic standard, whether we like it or not. How do we do that? And what's the best way to go back to this basics that really brought the world unparalleled economic growth and political and economic stability from the mid-1800s after the Civil War, I guess 1870 to 1914 to the First World War. We need to go back to that, I think. And how do we do it?
Yeah, that's a difficult question, but I think, we know the first steps. The first steps is a choice in currency, which means that you get rid of the legal tender laws that, make it binding on everyone to pay debts on creditors to only accept paper money if the debtors so desire. So you get rid of the legal tender laws, and at the same time take off sales taxes and capital gains taxes on gold and silver, allow them to be exchanged at par. And so once you do that, and also allow banks to offer checking accounts to American citizens in other currencies. So once that happens, that means that the Fed has competitors. Once it starts inflating the money supply and prices start rising in terms of dollars, the dollar starts depreciating. People can then shift part of their cash holdings to gold, to silver, to the Swiss franc, or to the euro. At that point, I think you're going to begin to put controls on the Fed. If that doesn't work and it gets worse and they continue to inflate, I think at that point you will see gold and silver being slowly monetized, meaning that people will begin not only to hold them, but to use them in transactions. And by the way, I don't know, there's a funny story a few weeks ago. It turns out that in some urban areas, a lot of urban areas in the U.S., people are using Tide, bottles of liquid Tide are being used by drug dealers and other black market participants in exchange for drugs and other goods. And there's been a rampant crime spree in which liquid Tide detergent is being stolen from from various retail stores, supermarkets, and pharmacies.
Yeah, in fact, I just interviewed Jeffrey Tucker yesterday, and we talked about that. We came to the conclusion that Tide needs a new advertising slogan. Money launderers prefer Tide 2-to-1 over competing brands.
That's funny.
And the other thing I'm figuring is that Homeland Security, I don't know if you caught this, they just put out a bid to buy 450 million rounds of .40 caliber ammunition. And everyone's scratching their heads saying, what do they need them for? Is this just waste? But I'm thinking if the economy collapses, bullets could conceivably be another alternative currency in the event that everybody stops taking dollars.
No, but I mean, it's true. I mean, we don't know exactly what the market will choose, but in a situation, and hopefully it never does occur, where there's, people need to survive, then bullets could be something that would be used as a hand-to-hand cash or currency.
Yeah, it's possible. We hope it doesn't happen.
Yeah, of course. But,
with the Fed, and then you've also got the other problem of the Congress just giving away the store. I mean, we've got this deficit, 1.5 trillion, and it just seems to go on indefinitely, and they're just printing up the money, so they have to have the Fed to write the check. Although if they just wrote it, if the Treasury just printed up the money in the first place, we'd be saving, the debt would be a third because we wouldn't have the interest payments on it. So maybe it's a reason to get rid of Treasury debt, which then fuels the creation of new dollars, and we have this debt-based currency. Maybe it's just better to print the stuff outright and be honest about it.
Yeah, that, of course, it's a way of hiding the actual inflation. The way that money is now created via open market operations in which the Fed buys government debt from a select few bond dealers and investment banks and so on. But the other point I wanted to make that you raised is that, in fact, it was the gold standard that prevented deficits. The gold standard was called the golden handcuffs because if the government started running deficits, the people holding the bonds would say, hey, wait a minute now, they're going to have to raise taxes quite a bit. They just can't print up these dollars and give them to us because the dollars are backed by gold. So in order to get the gold, they have to tax the people. So that's why deficits didn't explode until we got rid of the gold, the last vestiges of the gold standard in 1971 when President Nixon closed the gold window and refused to convert any more dollars into gold for foreign central banks and governments.
And it was also harder to go into a war when you actually had to pay for it with taxes. And interestingly, when you go back in American history, you see when we had bouts of inflation, it was always when the gold standard was suspended and we had greenbacks during the Civil War. Then we had tremendous inflation during World War I. So it was much more difficult under a gold standard to just have militaristic adventurism as well.
You're absolutely right. In fact, the war machine always needs the money machine behind it. In fact, I looked at this a little bit at the beginning of World War I. Within 2 weeks, every single belligerent government suspended the gold standard so that they could print money to pay for the war.
Yep. And then it was the reimposition of the gold exchange standard after World War I that drove us into the Great Depression, the worldwide depression, and eventually to World War II, as much as it was the reparations with Germany and everything else. I mean, up until the war broke out, we were still loaning large amounts of money to Germany. So
yes,
reimposition of the gold standard, if it's not done right, can really have disastrous consequences as well.
Oh, you're absolutely right. Both the gold standard after World War I, which was the gold exchange standard, and then another version of that after World War II, which is the Bretton Woods system, they were both phony gold standards. In other words, while gold was there in the system, for the most part, citizens could not exchange their dollars or their other currency units for gold. So it was really just window dressing to keep the confidence of the people in the paper money system that was being created under the cover of this so-called gold standard.
And that leads us to the next thing. Mises Institute, Ludwig von Mises, one of the least appreciated, greatest minds of, I don't know, maybe the past 1,000 years, realistically. And not to say that there weren't others before him and after who added to the Austrian school. Now you're a member of that. You're vice president for education at the Ludwig von Mises Institute. And that is the most important thing, because it's the ignorance of the monetary system. It's the ignorance of how inflation occurs and why this collapse is occurring now, that education is the only thing that can cure that ignorance. What's the Mises Institute doing to connect with people and to really make them understand what's going on here?
Yeah, before I answer that, I just want to mention that, yes, you absolutely are right. Mises is the Einstein of economics in some sense, and he was the first and foremost a monetary economist who was the one who really formulated the Austrian business cycle theory, which is today relevant in explaining, and it's really the only theory that can explain the bubble and the financial crisis that we had. But to get to the Mises Institute, we have a number of different programs. First of all, we have one of the most widely read websites at Mises.org, certainly in the top 10 of economics websites. And we also have numerous programs for both undergraduate students and for graduate students. So for undergraduates, we have something called a Mises University, where we train them for a week during the summer in the fundamentals of Austrian economics and some libertarian political economy. And we also have a summer-long program for economists, philosophers, and others that are free market-oriented who are working on their PhDs and doing other graduate work. And so we reach out to all levels. That is, undergraduates, graduates, business people. We have special Mises circles in different cities in which investors and other business people come and listen to speakers from the Mises Institute. So Mises always stressed that it wasn't enough just to reach out to other intellectuals. It was important to reach out beyond academia, because much of academia is collectivist, and reach out directly. Professional economists should reach out directly to the population at large, and especially to people in business.
Yeah, I love Mises.org, the website. I get the daily newsletter. I try to read it. It's pretty extensive, but I try to read a little bit of it every time I get it. Yeah. And then when I have time, I'm on vacation, I read it cover to cover. But it's really gone further than anything else out there. I mean, you do have other organizations, the Ayn Rand Institute, which definitely there's an overlap, and I have had Yaron Brook on numerous times.
Yes.
And then you've got the Cato Institute. You've got a number of think tanks out there, but in terms of a complete theory that really does explain how we got from A to B to C to where we are today, the Austrian school really, that's where it really shines. And I think the interest, especially with Dr. Ron Paul being in the limelight so much, it's got to be helping to spread the Institute's theories and message.
Yes. Dr. Paul has done just a Herculean job in spreading the freedom message. And, he cites the Mises Institute as his primary intellectual influence. And, of course, that has helped direct people to us. So I would say that the Mises Institute, we're not a lobbying group. We're an educational group. We're interested in reaching out to the so-called masses. And by masses, I don't just mean people that don't know anything. I mean people of all levels in American society. I mean, the time is growing short now. The economy's unraveling. We're getting more political, I'll use the word dictatorship, coming in. And it's so people have to be educated and understand what's going on in order for them to take action as citizens.
Yeah, absolutely. I'm totally with you there, especially you and I. We live on the East Coast, and people don't understand what it is to build wealth. They don't have any clue. They think that wealth comes from a government edict, from government-created fiat currency, from government programs. And then when you watch these great green initiatives unravel before your very eyes, and then you also look at the revolution in energy production in the U.S. that's taken place in spite of all the barriers that the U.S. government has put before these companies, whether you like them or not. We need them. Yes. It's remarkable. It is the perfect analogy of free market versus collectivism and what happens, as if we needed another example, mind you. I mean, we spent 40 years fighting it, or 50 years in the Cold War, and it looks like we haven't learned anything. Yeah,
I agree with that. In fact, the energy crisis, just because you mentioned it, is of our own making. I mean, we have tremendous amounts of energy resources here in the United States. If oil prices go up, there'll be, if the government steps out of the way, and we haven't had, by the way, a new refinery built since 1979 here because of government regulations. If they step out of the way, I think private enterprise will give us more than enough energy. We have a tremendous amount of coal, which can now be burned very, very cleanly. We have a tremendous amount of oil, shale oil, and other types of oil in rocks and so on, and liquefied natural gas. And so I don't think, I think that this energy problem is government made.
Yeah, totally. No question about that. So if people want to learn more about you, Dr. Salerno, and the Mises Institute, where should they go?
They should go to www.mises.org, and they'll find a wealth of resources there, and they can Google my name there and see what I've been up to.
I'm on the site now, and there's just so much good stuff there, and a lot of it is free. The podcasts are free, yes. The daily update, and the books that are there. There's one particular favorite of mine about hyperinflation in France in the late 1700s. Just a great book, and one of the few places you can get it. We thank you for coming on the Financial Survival Network. Keep up the great work, and I hope I connect with you at the Institute the next time there's an event.
Great. I'm looking forward to it, and thank you for having me on.
A pleasure.